Hello and welcome to the November 11th, 2022 edition of Watching the Tape. The cryptocurrency world was rocked this week with the news that the second largest cryptocurrency exchange is now teetering on the verge of bankruptcy. The exchange is FTX, and if you're not familiar with that name, I really can't blame you. You're probably better off. But there is maybe there's a chance that you saw the FTX commercial starring none other than Tom Brady encouraging all of his friends to use FTX. Or if you watched any Major League Baseball this season, you may have noticed that all the umpires were wearing FTX patches on their uniforms. In any case, FTX reportedly had a valuation of $32 billion at its latest fundraising round and was conducting business as usual up until about last week. Then a document was leaked casting doubt on FTX's financial strength, which led to really a stampede of investors pulling their money from FTX, probably not all that different from a bank run. Now, there's more to the FTX story. It's an interesting read if you have the time, but I want to transition to what it means for the overall cryptocurrency space. So one of my interests or hobbies, I guess, is watching the price of Bitcoin, which is the world's largest cryptocurrency. And Bitcoin peaked at over $67,000 just about almost exactly a year ago. And now it's down 75% since then. And most of that precipitous fall occurred between last year's November and mid-June of this year, at which time it started trading eerily range bound for about 5 months until this week. I should clarify that while I'm very interested in following Bitcoin and other cryptocurrencies, I have never once been tempted to buy any of this stuff. It's a totally worthless, made-up currency. So I guess I'm really more just fascinated by how any of these continue to have nominal values. And I don't want to come across as being overly critical of crypto holders. Notice I didn't say investors. I know several people who are involved and they've gotten involved with their eyes wide open to the risks. But then there are the true believers. And if you ever come across a true believer, buy them a drink and just sit down and listen. I'm telling you, it's a wild ride. You're going to hear lots of buzzwords and wild extrapolations about the future of global finance. You will find yourself questioning your own sanity after a few minutes of listening to a true believer. You might start thinking, maybe this guy's right. You know, he's awfully sure of himself and he hasn't said anything that I can shoot down with common sense, mostly because I have no idea what he's talking about, but eventually you'll come to your senses. And after you've escaped that hypnotic trance, you'll fall back on maybe some of the words that you've heard from some of the wise investors of our time. In particular, Warren Buffett and Charlie Munger of Berkshire Hathaway have been pretty critical of Bitcoin and crypto. And Buffett called Bitcoin, quote, rat poison squared. So that, pretty succinct. Charlie Munger got a little more creative. He said, in my life, I try to avoid things that are stupid and evil and make me look bad in comparison to somebody else. And Bitcoin does all three. So what's another reason to keep tabs on crypto, just in general? Well, there's a fair amount of money in this market, and it's a volatile market. So the question of contagion risk does come up. And by contagion, we can define that as contagion is the spread of an economic crisis from one market to another. So markets are interconnected, and sometimes things in one market spill over into other markets. So the likelihood of contagion is often difficult to assess, but we can kind of help our understanding of the potential for this by looking at the relative size of the crypto market relative to other financial markets. So the global crypto market cap, so just the global market cap of cryptocurrencies, is about 900 billion. Now, Bitcoin is 37% of that. So lots of other cryptocurrencies at play, but Bitcoin is the largest and represents about 37% of that overall market cap. So that 900 billion is a real number. How does that compare to the S&P 500, for example? The S&P 500 market cap is about 33, 34 trillion. And there are 3 companies within the S&P 500 individually have market caps larger. So Microsoft, Apple, and Google have market caps that are larger. But again, it's a big market. So would a collapse or would continued turmoil in the cryptocurrency market potentially spill over into other real investment markets? And I think the answer is yes. But those other markets are going to bounce back. So it would be a temporary phenomenon. So I could wrap up this video by pleading with everyone out there to not buy crypto just because the prices are low. But I don't get the sense that a lot of the audience for this is really itching to buy crypto. And I guess the price is low relative to its historical price. So I guess if we want to say it's low, yeah, it's low relative to historical prices for cryptocurrencies. But how does that price compare to its intrinsic value? And that's, of course, a trick question because there is no intrinsic value here. That's it. We'll see you in 2 weeks.